Good afternoon, everyone, and welcome to Stock Market Today, sponsored by Interactive Brokers. We're live from Los Angeles in the Investors Business Daily studios, and it's Monday, August 19th. On today's show, we're going to be talking about a downgrade in Zscaler, Twitter retaking a buy point, and also Iqvia, which is setting up. But first, let's take a look at the major market indexes. This is Justin Nielsen along with Ed Carson, and it was a strong day, a strong follow-up to Friday's action. It looked like the NASDAQ Composite closed at up 1.4%. The S&P 500 closed up 1.2%. Dow Jones Industrials up just under 1%, and the Russell 2000, the small caps, up about 1%. So good broad participation across the indexes. I was talking to Juan earlier, and he said it was a 3-for-1 advancers over decliners. So not a bad breadth across the markets.
Yeah, I mean, and the indexes are getting close to their 50-day lines. I mean, the NASDAQ, you can see it sort of moving back toward that. The S&P and Dow are also making their way there. I guess the only downside, really, I mean, other than the fact that we're still up and down, and we've had, now the real string is that the leading stocks were not particularly strong.
Yeah.
Chips looked like they were strong early on, and then they faded, and software never really got going. I mean, Microsoft did well, and so some of the big names, but it was sort of uneven on that front.
And if you were looking at some of the Market Smith screen for breakouts, it was kind of, I think it was zero.
Yeah, it was zero. I mean, in part that's because we had only had about 3 weeks since the market top. Mm-hmm. Not much time for bases to form. I mean, there was a few bases that formed because stocks started consolidating before the market a little bit. But other than that, I mean, these other stocks are it's too short to have buying opportunities.
Yeah. So now we have the NASDAQ Composite that got back above the 8,000 level just barely, like 8,002. And as you mentioned earlier, there's that 50-day moving average that could be potential resistance. Were there any driving headlines that were behind this move?
It seemed like there were some China trade headlines. Trump made some positive comments, but they were sort of mixed. Mm-hmm. Then there was a 90-day extension for Huawei. And for suppliers, they can continue to supply Huawei for some things. It's not full scale. I think that was sort of expected, but it was nice. Mm-hmm. I mean, maybe the market's just in a little bit of a rally. I mean, they're sort of rebounding. It's sort of been bouncing up and down. So, there might be little other factors, but we'll see.
Yeah, exactly. And news could, turn it tonight and or whatever. So we don't know. But we've had a few good days here, and so we'll see if that can continue, get us back above the levels that we were at before, and a little bit more strength. So on the downside, of course, we had Zscaler with a downgrade, and when you see leading stocks act in this manner, it's a little disconcerting. I mean, downgrades by themselves aren't necessarily a disaster. You have to look at how the stock acts, and Zscaler just did not act right.
No, it did not. I mean, the stock had been sort of trying to hold support near the 50-day line. It closed on Friday just below that. I mean, the relative strength line, so that blue line down there, it had been doing reasonably well, even though the stock had pulled back. But man, stock really sold off hard, lowest level in several months, heavy volume. When you're a richly valued stock like this, and they're recently profitable, and there's a lot of expectations, this has been one of the big winners of 2019.
Right.
When any kind of negative news is out there, boy, that can take it out. And some other cybersecurity names have come down, and this is probably one reason why software just wasn't very powerful today.
Right, exactly. So now for people that have owned this for a while, is this kind of like, okay, it's done, I should exit, or hey, I've got a lot of cushion, maybe I can hold through?
I mean, obviously, it depends on how big your cushion is. I mean, right. IBD leaderboard, and I'm not sure where we bought it this time, but leaderboard sold it today.
Yeah. And we didn't have much cushion, so we almost had to. We had to kind of obey our sell rule of 8%.
Yeah, exactly. And so that's a different situation. Mm-hmm. Longer time holders, you can hold all or part of it. Again, it's what do you think is going to happen? Are you willing to sit through maybe a long correction? It seems like this is going to take a while.
Yeah.
And if you sold it, you're like, well, maybe I'm missing out. But there could be other things.
Right.
I mean, exactly. It's not like if this market turns around, there's probably other things. Mm-hmm. But that's always a question. I mean, there's always going to be situations like this for big leaders. And so.
Yeah, and that's always the risk of trying to stick with a big leader. It's like, okay, at a certain point, it could be done, and you might have better opportunities elsewhere. Yeah. So speaking of which, let's go ahead and talk about Twitter. Twitter retook a buy point. It kind of paused a little bit over the last couple of weeks, and now it's back above a buy point around 41.02. What does Twitter look like to you?
Well, I mean, Twitter, it came back. It was on light volume, but on the upside, the relative strength line really didn't come down that much, even though the stock is still a little bit off that, short-term high, 52-week high. I guess all you could say on the flip side, Twitter's doing fairly well, and it's sort of fighting to stay above the buy point. If you bought on the breakout, because of the way the market's acting, there's not really any upside, there really. I mean, maybe, you're up a few cents or maybe you're down 1%. So that's a lot of time, and that's Twitter doing better than some others. You can have situations like Zscaler where everything's fine and then it's not, and so that's just a difficulty in a choppy market. How far are you getting?
And even given that there was some weakness here, Twitter did hold up fairly well, and as you mentioned, that did reflect in the relative strength line.
And if we turn around, maybe this is going to really go. I mean, it's like if this is
those are the ones you want to watch.
Yeah, exactly. So it's always tricky. That's why choppy markets are so hard.
Okay, switching over to medical, Iqvia. Now, this is the result of a merger. They're in the contract research organization, and kind of like what we were talking about before. It's not the miners; it's the ones that are giving you the picks and stuff. So they don't have those FDA approvals they have to worry about. They're doing the clinical trial research and a lot of those other things, the data behind it. So, what does Iqvia look like to you?
Well, it's got a base on base formation, a new flat base happening here. The stock has been finding support at the 50-day line. That relative strength line has pretty much been, pretty much sideways at highs. The company has decent earnings growth and decent expectations, not tremendous. And that's somewhat what we're seeing now. Some of the really hot, fast-growing stocks, maybe because their growth rates are slowing, or people just feel like it's gone up too much. Those aren't necessarily leading. You're seeing more stocks with slower growth, which sort of a defensive kind of situation. You probably figure, well, there's always going to be clinical trials, recession or not.
Right.
So there's that situation. It's hard to know if, is this really going to be a powerful leader, but it's done well. You've got reason to think that it might continue to do well because it does have earnings growth. But that's just something to keep in mind, is that's the kind of stock that we're seeing. Right,
and the sales growth is into the single digits at this point. And while the earnings growth is double digits, it's low double digits. So, but there's a lot of people looking at some of those less volatile names that maybe until I find out for sure that this market is for real, maybe those are the better bets.
Some medicals are doing better now, and I bet part of the reason is a choppy market because medicals have growth, but they're fairly steady, somewhat recession-proof. So they're a natural candidate when the market is sort of going sideways.
Great. Thank you for the insight, Ed. And that'll do it for us today. Don't forget that we had another investing strategies that will be dropping today. That is Ali from the NASDAQ. And if you want to access that, you can go to investors.com/investing strategies. And also don't forget to check us out on social media. We are on Facebook, YouTube, Instagram, and Twitter. And you can just interact with us from any of those social media platforms. Thank you very much for watching, and we will see you back here tomorrow.